Over the past 8 years, I've read more than 500 books on money, business, investing, and self development. And here's what I found most of them are filled with fillers, stretching one idea into 300 pages just to hide a single nugget of wisdom. But these 7 books completely change how I view money, success, and life. These are the books that can transform your mindset and your bank account. So instead of wasting years digging through those hidden gems like I did, in this video, I'm going to share the key lessons from those 7 books that changed my life, the ideas that shifted how I think, how you can use them to change your life. So let's get into it. So let's start with the first book because it lays the foundation for everything else. The Almanack of Naval Ravikant. Naval is a Silicon Valley angel investor, and he's backed many of the biggest companies you can think of, like Twitter, Uber, Notion. He's just as well known for his wisdom on money, happiness, and life. So this book is a collection of all his best ideas. It teaches you the fundamentals of being happy, how to build wealth, how to live life with clarity and fulfillment. One of his core ideas is that the number one rule to building wealth is to own equity in a company. So no one gets rich renting their time for a paycheck, okay? You get rich by owning a piece of the business. And equity can look different depending on your path. So it might be starting your own business, being a partner in someone else's business, or owning shares of a great company through the stock market. And the principle is the same for all of them. Wealth comes from ownership, not trading your time for money, okay? So he also teaches that leverage is everything. Leverage means multiplying your effort so you're not relying on your own time. And Naval breaks it into 4 types. The first leverage is people. Use other people's time and skills. And the second leverage is capital, putting money to work so that it can earn more money. And the third leverage is code. You can write a software one time and it can scale infinitely. And the last leverage he talks about is called media. So you create content like books, videos like this, or a podcast, and it can reach millions without extra effort. Here are some examples. Let's look at McDonald's. Everyone knows McDonald's. It became a huge franchise by combining 2 forms of leverage, people and capital. There are millions of people that run the kitchen, that serve customers, and then on the capital side, it built wealth through franchising and owning real estate on prime locations. So these 2 levers that McDonald's pulls, it made it become one of the biggest companies in the world. Now, let me show you what happens when all 4 levers come together. A company that we all know, Facebook, also known as Meta, it uses people. So that's the first lever. So engineers, the sales team, whatever you call it. Second lever is capital. Okay, billions of people raise and invest. And the third one is code. So it's a platform, there's algorithms, right? And lastly, media, right? There's billions of posts, videos, media by the users. So when you stack all 4 of these, you get one of the most valuable companies in the world. And Naval's point is simple. The highest level of wealth comes when you combine these levers. Master just 1 or 2, and you can become really rich. But when you stack like 3 or 4 levers, that's when you become filthy rich. Because your effort multiplies far beyond what just one person can achieve alone. This is why the Almanack of Naval Ravikant is a great book starting out. For your personal finance journey, it gives you the fundamentals of wealth, but it also ties in happiness and learning how to be fulfilled, showing that how you can design a life worth living. Naval shows us how to build wealth with equity and leverage, but none of that matters if your mindset is broken. This is where the second book comes in, and it's called The Psycho-Cybernetics by Maxwell Maltz. He started out as a plastic surgeon, helping people change how they look, but he noticed something way deeper. Changing the outside didn't always change how people felt on the inside. So this book taught me 3 powerful ideas. Your self-image sets your ceiling. So let me explain this. The way that you see yourself is your ceiling on your growth. So call yourself bad with money and you're going to spend recklessly, or you're going to avoid investing. But see yourself as disciplined and capable, and you're going to make choices that build wealth. And the second idea is your brain is always a goal-seeking machine. Maltz compared it to a guided missile, always adjusting to hit whatever target that you set. So focus on being out of shape, and you're going to be out of shape. But focus on getting stronger, healthier, and you're going to find ways to eat better, to move more, to build fitness into your life. And the last key idea that I learned is visualization works. So when you visualize, your brain can't tell the difference between a vivid image and a real one. So that's why athletes rehearse in their minds before a game. The same goes for you. So whenever you want something, picture it clearly, and your actions will start lining up with that vision. This book makes it clear. Wealth doesn't start with your money. It starts with a mindset. So when you reshape your self-image, you give your brain the right target, and you're going to naturally hit closer to that target. Maltz proves that success starts in your head. Once the mindset is in place, the next step is learning how to think clearly about money and making better choices. The third book is Poor Charlie's Almanack by Charlie Munger. So Charlie Munger is Warren Buffett's business partner at Berkshire Hathaway, and this book is a collection of his speeches, his lessons, his life philosophies. And if Warren Buffett is one of the best investors of all time, Charlie is the sharp mind behind the scenes who taught him about mental models and clear thinking. I'll be honest, this book is a lot of fluff. There are long sections about his life and speeches, but hidden inside this massive book are tons of gems. And these gems can completely change the way you think about money and making better choices. The core lesson is that better thinking leads to better choices, and better choices lead to wealth. Here are 3 of my favorite mental models and ways to think from the book. In this book, he uses the example of, to a man with a hammer, everything looks like a nail. The first mental model is called inversion. Instead of only asking, how do I succeed? Munger flips the question, how do I avoid failure? For example, instead of asking how to get rich, he asks, what mistakes keeps people poor? Like piling on bad debt, gambling, chasing quick money schemes, avoiding stupidity first, and you're going to be ahead of most people. The next mental model is second order thinking. So most people stop at the first consequence. Munger pushes himself to ask, and then what? For example, if a company cuts prices, the first effect is more customers, but the second effect might lower margins, weaker profits, and eventually less ability to compete. So thinking in second or third consequences helps you see the full picture. And the last mental model is circle of competence. Munger also teaches the idea of staying inside your circle of competence. That means only playing games that you really understand. Buffett and Munger avoided tech for decades because they didn't get it until they finally understood Apple. The lesson is simple. Stick to what you know and avoid risks in areas that you barely understand. This book matters because while it's not the easiest read, it gives you a toolkit for making smarter choices in business, investing, and life. And those gems of wisdoms are worth digging for. By the way, if you're getting value from this, make sure to hit the like button and subscribe. I make a ton of videos on personal finance, business, investing, and I don't want you to miss the next one. Munger gives us the mental models, but how do you actually apply them in investing? And this is where Manish Prabhai comes in. The fourth book is called Dhando Investor by Manish Prabhai. Prabhai is an investor who modeled his investment styles after Warren Buffett. But this book explains his philosophy in simple terms. The word Dhando comes from Dharati, a region in India, and it means endeavors that create wealth. Prabhai uses it to describe a mindset, low risk, but huge upside. So a clear example are the Patel community of Dharati immigrants in America. Many of them arrive with little or no money, and they buy struggling motels, and they live in them with their family, and they run the business. So they keep the costs at a minimum, and they work as a family, and they can even survive if the motel fails. But if the motel succeeded, the payout was huge. And this is what he calls a Dhando. This principle carries over into investing through what Prabhupada calls asymmetric bets, opportunities where the downside is low, but the upside could be life-changing. And if you're wrong, you lose very little. And if you're right, you win massively. So let me give you an example. Take Netflix. In 2022, the company lost subscribers for the first time in a decade, and the stock crashed more than 70%. And on the news, people were saying Netflix was done, they were finished. But underneath that, the business still had 200 millions of paying subscribers. They were generating $1 billion in cash flow. So for investors who saw that, there wasn't much risk. But the upside was huge when the stock rebounded. So this is exactly what Prabhupada meant, asymmetric bets. Another key lesson I learned from this book is called cloning. Whether it's in business, investing, or life, you don't need to reinvent the wheel. Study the people who's already succeeded and just copy the strategies that already work. Prabhupada cloned Warren Buffett's investment style, proving that success often comes from following proven paths instead of starting from scratch. So what I love about this book is that it proves that success comes from discipline and not from taking risks. It's about stacking the odds in your favor through asymmetric bets and by cloning strategies that have already worked. Prabhupada's playbook is powerful, but he admits most of it comes from cloning one man, and his name was Benjamin Graham. The fifth book is The Intelligent Investor by Benjamin Graham. Graham is known to be the father of value investing. This book was first published back in 1949. Warren Buffett, who was one of Graham's students, has called it the best investing book ever written. The key idea here is to focus on being an investor and not a speculator. A speculator is guessing which way the prices will move. An investor sees stocks as a real business and asks, is the company solid? Am I buying at the right price? And Graham taught that your biggest edge is patience and discipline and not trying to predict where the market was going. And one of the most famous concepts from this book is Mr. Market. Graham said to imagine the stock market as a business partner who shows up every single day offering to buy or sell at different prices. Some days he was euphoric and he would overpay. Other days he was gloomy and he would sell cheap. For the intelligent investor, you never get swept away by the moods and you will take advantage of them when the price was right. So another powerful lesson is called the margin of safety. So you always build a buffer into your investments. You buy a business at a discount to what it's truly worth. And that way, even when you're wrong, you're still safe. It's like a piece of cushion that protects you if your judgment is wrong. What I love about this book is that it gives you the foundation for all the smart investing. It's about protecting your money and letting it grow over time. It's about protecting your downside, staying disciplined, and let compounding quietly work in your favor over time. So Graham's approach is about patience and compounding over decades. But if you don't want to wait 40 years to enjoy wealth, the sixth book is called The Millionaire Fastlane by M.J. DeMarco. He explains that most people get stuck in what he calls the slow lane. You go to school, you get a job, and you slowly build a 401k. And this is the traditional way. Everyone gets this advice coming out of school to save pennies and to retire at 65. Instead of this way, DeMarco talks about what he calls the fast lane. You build a business that grows income, buys back your time, creates freedom, and true wealth, he says, comes from control and scale. The more people that you can impact, the greater your rewards. One of the most powerful lessons is called the commandments of control. You can't build lasting wealth if someone else has all your power over your money, whether it's your boss, a client, or even the government. In the fast lane, you create assets that you own, control like business, property, or systems. Another key concept is the difference between a consumer and a producer. Most people spend their lives as a consumer, but wealth flows to producers, the one who creates products, services, or contents that solve people's problems at scale. And that's what I like about this book. It pushes you to think like a producer. It's not about pinching pennies or waiting decades. It's about creating something valuable that gives you freedom way sooner. DeMarco shows us that Building a business is the fast lane, but ideas alone aren't enough. You need systems to run the business. And the last book is called Traction by Gino Wickman. If other books give you a mindset and investing principles, this one gives you systems to actually run and grow a business. So Wickman created what he calls EOS, Entrepreneurial Operating Systems, a step-by-step framework that helps entrepreneurs get control of their companies instead of constantly putting out fires. And one of the biggest lessons is about vision. So every company needs absolute clarity on where it's going and how it get there. So without a clear vision, you can't align your team or make the right choices. Another key takeaway is the accountability chart. Instead of a traditional org chart that shows a hierarchy, an accountability chart makes it crystal clear who owns which results. This prevents overlap, confusion, and the everyone thought that someone else is responsible problem that kills execution. Finally, Wickman emphasizes that traction needs discipline and metrics. He introduced the idea of having a short list of measurable numbers that tells you if your business is on track or it's off track. So you just need the vital signs of the business and you track it weekly. So what I love about this book is that it takes the big picture dreams and it breaks it down to processes that you can actually run every single day. And you're serious about scaling a business, Traction gives you an operating system to do it. These 7 books can give you the tools and mindsets to build wealth, but books don't change your life. Action does. So apply what you learned, and that's where the results will come. If you like this video, please like and subscribe to the channel for more content on personal finance, business, and investing. I post a lot of videos just like this. Now, if you want to go deeper, check out the video, The Quiet Habits of Millionaires. That video shows you how wealthy people live day to day. Yeah, click it, okay? See you there.